Hi, Rich Bouchner, Bouchner & Co. Real Estate. Thanks so much for taking the time to check out my video blog. Today, I'd just like to have a brief conversation about interest rates and their effect on the buying and selling process. Most people, I'm sure, realize that rates are at a historical low. 4.5% for a mortgage, 30-year fixed mortgage is essentially free money. After the tax break that the IRS allows for interest deductions, the effective rate at 4.5% is ridiculously low. Talk to your CPA about this. They're going to tell you the same thing. Free money at 4.5%. But what I see happening in the New York marketplace right now is a lot of deals are dying on the vine over small amounts. I see people who are buying million-dollar properties or selling million-dollar properties, and they're leaving deals on the table over $10,000 or $20,000. Now, of course, $10,000 or $20,000 is still significant money, but when one thinks about the difference of a million-dollar apartment, the payments on a million-dollar apartment at 4.5%, where we are right now with interest rates, versus 6.5%, which is a very realistic number, still low historically. Remember that mortgages are typically 7.5% or 8%, and back in the 70s when we had hyperinflation, mortgages were in double digits. But let's just use 6.5% for this example. If a person buys a place at $1,000,000 and they're able to get a 4.5% mortgage, their payment is going to be roughly $5,000 a month. If a person buys a place, $1,000,000 place, and their mortgage is at 6.5%, their payment is going to be $6,300. That is a difference of approximately $1,300 a month. That's serious money. But let's think about that over the course of 10 years. Let me look at my notes. Over 10 years, that's $156,000. If a person buys a place at 4.5% and their payment's $5,000, or buys a place at 6.5% and their payment is $6,300, that's $156,000 over 10 years. What is that over 20 years? $300,000. Over a 30-year mortgage, that's $450,000 difference. That's almost half of the initial purchase price. So again, I see sellers saying, I don't want to sell this place because my buyer is $10,000 away from what what I want. Well, what does that mean to the seller? It means that they can't move forward with their life. They can't take this money that they're going to get when they sell their apartment and buy their next place. They're going to end up waiting, and it's going to cost them a lot more over the life of the next loan when they buy their next apartment. What does that mean for the buyer? It means they don't want to go into their pocket for another $10,000 or $20,000, which I get. But that's short-sighted. Over the life of that loan, it's going to cost them a lot of money. $150,000 for 10 years, $450,000 for 30 years. Buyers and sellers in the New York marketplace need to understand that rates are at an historical low. If you're a buyer and you see a property that you want, don't lose it over $10,000 because you're being penny wise and pound foolish. If you're a seller, don't let a deal die in the vine over $10,000 or $20,000 because it's going to impede what you're able to do when you buy your next place. So all I can say is step back, look at the big picture, don't get caught up in the minutia, and if you see a property you like, it's a great time to buy because rates are low. If you're looking to sell, you probably want to think about getting deals done so you can move on and buy your next place. Hope this information was helpful. If you have any questions, please feel free to email me at rich@bachnerrealestate.com, or if you want to call me, by all means, pick up the phone, 347-560-1606, 347-560-1606. Thanks so much for taking the time to check out my video blog. I hope this short conversation about interest rates and buying and selling has been helpful.